Good morning, good morning, good morning, traders around the globe. Welcome to another week, and what a week it will be. This week is going to be packed with events, data, central bank meetings, treasury announcements on their funding needs. Um, I also think we have the JMMC OPEC meeting going on. A lot to happen this week. So we better get ready. Let's get started with some of the weekend news and some of the data. Ryan will be off today. He's celebrating his niece's birthday. He will be back with us tomorrow. So tomorrow we will be at full speed again. All right, let's get stuck into what's happened over the weekend. On Friday, we had, and that's a bit important because I think it's part of what's weighing on the euro as well to start the week. We had this decision by Biden to hold permits for LNG projects. This should not really affect European deliveries in the short term, but if this really gets confirmed and if they are putting those LNG, which Europe needs, deliveries in danger over the longer end, it may actually continue to weigh a little bit under the surface on the euro. So I thought it was important enough to mention that. Also out, and then we are moving over to our usual around the globe tour, is that China's Evergrande finally has been asked to wind up. The shares have been suspended, and that's likely to be the end of a story over there. Also, China came out with officializing rules that people buying Chinese shares would not be allowed to lend them out, not to spur any more short selling. Not that the Chinese market has been extremely impressed by it, because most of the Chinese components and Chinese equity markets have, after all, closed down. So the market is still not on board with what the Chinese want to try and stop the rot in their markets. This could still be something for the more medium term if they succeed to do it. In the meantime, PBOC is still fighting against a two-week yuan by fixing the dollar CNY into the 7/10s, where the market is rather trading, or was rather trading overnight around 717, 718 in the dollar CNY, and dollar CNH is on the approach of the 720 level again. That for China. And then we need to move over to the Middle East because there's too much tension. I'm not going to elaborate on everything that's happening, but everybody saw the news, various bombings, fires, drones being sent out, retaliation. Biden promised to retaliate as well against some of those attacks, under which the one in Jordan. And that's all also somewhere putting pressure on the supply chain from Asia into Europe and vice versa. And that, I guess, is one other reason why the euro is opening a bit weak or weaker this morning. Anyway, the Middle East developments are not really going in the right direction, and I guess we are going to. The market has been relatively numb until the end of last week, where we finally saw the oil and energy starting to pull higher, and I think the market is finally really waking up to those risks, because they continue to actually get worse instead of improving. So that is something that we will have to pay attention to, I guess. I'll have a look at the oils when we are looking at the what's happening in the markets. Um, We had speakers out in and then coming close to home in Europe, and the doves finally came out of the woodwork. The ECB doves we had Villeroy changing his tone from the last months. That was a clear shift when he said over the weekend, giving an interview to one of the French press outlets, saying that. Inflation is moving to where they want it, and he was refusing to push back against rate cuts or sooner rate cuts again, saying that every date is now open. And we also had the windows coming out still somewhere more balanced, but the inner dove came out as well because he mentioned something about not saying the Red Sea impacting rate decisions right now, but then they will cut the interest rates when they are sure that inflation meets the 2% goal. But he is optimistic about the inflation performance, even about the core inflation. All right, so the Windows is sliding back to his dovish self as well. And then we, of course, Centennial, we know he's the Uber dove. He said that the ECB should start to cut rates sooner rather than later to avoid abrupt moves later on. And the ECB also has to be a sort of source of stimulus for the Eurozone economic growth. So he's still been a dove. He's the dove in the ECB Governing Council. So he has been commenting again this morning as well. Against that, we had ECB's Casimir, one of the hawks, and he said that the rate cut in June is more probable than April, but the exact timing is secondary to the decision's impact. So he's not completely ruling out April. So that's an additional factor that I mentioned this morning in the room, why the euro is under pressure this morning. There's not too much good news out for the euro over the whole course of the weekend and in the well, the data as well that we've seen slipping, and now the ECB members starting to downplay the core inflation, and some of the doves are starting to press for earlier, perhaps cuts, where before they were very silent and only the hawks were really talking ahead of ECB decision and even a bit after, because ECB not still sees inflation only coming down to their 2% in 2025. And he said that the wage growth needs to come down before he turns dovish, but not being one of the hawks, that's not really a surprise from his side. So what else have we seen? Let me just run over to what I had. Yeah, and that's one that I'm going to talk about for the Mexican peso, because we will also have the Banxico out this week. And even though we see Euromex, for instance, coming off under the weight of the euro, there may be some worry for the Mexican peso, because Biden clearly came out with support, saying that he would do something about the border issue if that influx of migrants is continuing and is putting more pressure on the Texan border. So this is one that we should keep an eye on, because it may have an impact on the Mexican peso. Not sure this week. Banxico could keep its interest rates still, and then it's still very tough to fight an 11% currency, as I've been saying very often over the show. But it's something that people who are trading the MEX will have to pay attention to going forward. So let's have a look at what's happened on the data, especially on Friday. We saw those PCE data coming out. We did have the 3-month on 3-month, and that is not thing represented here, coming down, and that's the 3 on 3, the 6 on 6 PCE, core PCE prices are coming off. Okay, so they are. We're seeing here the headline on the year on year, but the 3-month, 3-month, the 6-month, 6 months are coming off and are below the 2% Fed marker. And that has pushed some people in now, and I've read a couple of articles, read a couple of comments, not saying that March is going to be the moment where the Fed is starting to cut rates, but it is possible that in this week's FOMC we are going to see a clearer picture on how and when Jay Powell and his mates at the FOMC Council want to start cutting rates. So again, this is one that we need to keep a very close eye on this week for what they are going to announce. Otherwise, my base case is for them to keep everything still, but there's going to be two things that we are going to have to watch in this week's FOMC. There is a clearer path, possibly or not. And then the other one, which I have been banging on about as well, is that the RRP reserves are now starting to come off into those levels where the market is perceiving them as being low enough for QT to start to be rounded down. And so that means that if they do something about QT, which is not right now, but if they give a plan for QT, and he's probably going to be grilled about that on Wednesday, if they give us a clearer plan, the market may react on the back of it through the yields as well, right? So, and we can't talk about those prices and about yields without mentioning, of course, what I've been talking about for a few times now. We do have this week as well, and this is going to be a big one for yields. We do have the US Treasury announcement for their plans, for their refunding plans for this quarter. So I think it's going to come in two stages. We're going to have an ID today, but then I guess on Wednesday we will get the absolute breakdown of the maturities that they are going to prioritize. Remember that August, November, we had like big moves on the back of it, especially the November one, because it by doing more bills shorter term than bonds longer term, they did influence the curve, they did influence the dollar, they did influence the 10-year. And so this week, it might even be a bigger event than the FOMC. This week, we are going to know what they want to do. So that is one that everybody should pay extreme attention to. That is those US Treasury announcements, okay? What have we seen as data, further data? Yeah, we saw the industrial profits in China still being negative. It's just adding to the global picture that they are still not out of the woods. There's still a lot of work to be done in China. So it's still a bit dangerous, in my opinion, to dive into the Chinese yuan right now, unless we would see a big setback in the dollar. That could be something that weighs on the dollar China as well, but that would be a dollar in issue and not a Chinese driven revival, okay? Kiwi trade balance, all right, letting that go through. There's not a lot to talk about it. We know that it's been negative for some time. Imports, exports coming down fractionally, but it did not impact the Kiwi too much. We had Sweden GDP. That's still the Q4 data, but we have seen the December one is still negative. So Swedish kroner is also under a bit of pressure this morning. We know that the Riksbank sometimes is how they call it, managing their FX outstanding. That means intervening to buy Swedish kroner. But if the numbers continue to be negative, we also saw negative retail sales in December. If the numbers continue to be negative, I think the Swedish kroner is going to find sellers at certain levels. The rest of the data, minor data, Belgian GDP for Q4, but those are still Q4 numbers. I think the market is already waiting for what's going to happen on the 2024 data. Although in this week's on this week's calendar, we do have still important EU data, still Q4, but we do have the French GDP out tomorrow. And then we have a slew of European CPI is also out and the GDP here in Spain also coming out tomorrow. And then on Wednesday, we do have I, still not a final reading on the Q4 GDP. We know that it wasn't a great number to start with. Steve, we confirmed the negative number here. But then the one for the European watchers this week, which is going to be very important, is going to be I think we've got it here. Yes, all those Eurozone CPI data these are preliminary data for January. These are data for January in Germany as well. And then we are going to have Ireland as well. But those are really going to be very important data coming out for the Eurozone. Okay, if they continue to print weaker data, if CPI continues to accelerate to the downside, I could imagine that there's still going to be a bit of pressure on the euro. Whether it be versus the dollar remains to be seen in the light of those U.S. Treasury announcements ahead of the FOMC. But if everything else equal, it could put pressure on the euro process, for instance, if that CPI continues to come down. All right. Of course, further down the road, we will have the FOMC Wednesday. That is, we will have some housing data as well. But then we will have, of course, the FOMC on Wednesday. We will talk about the FOMC in further details with Ryan over the coming days. But again, as I said, my base case is for them not to change anything right now, but everything is going to be sorry, everything is going to be in the statement and in the press conference. That's where the major move on the dollar could come from, and then we will have to see where that puts the dollar in combination with what the U.S. Treasury has announced. So for me, it's going to be a duet between the FOMC and the U.S. Treasury to really pick a direction. Once that's done, we will have probably a clearer direction on the yields on bond markets, possibly on equity markets as well. If we get a bigger fight back, the equity markets may finally find the top, but we will see how that develops. But anyway, it's going to be a big week for the dollar. It's equally going to be a big week for the sterling, because we will have the Bank of England on Thursday. Where is my Bank of England? Here, we will have the Bank of England on Thursday. Expected to keep rates unchanged, but the inflation picture, even though sticky, is starting to come down as well. So again, shouldn't be moving the decision. The votes will have an impact, and then of course we will have straight away the minutes of the meeting coming out and telling us who is starting to lean towards an earlier or a later move. We've also seen job vacancies coming down, so a bit globally around the globe, those inflation pressures are coming down. There's no exception really in the majors anyway. But we will have to see one versus the other, who wants to push harder than the other. We know that Bailey is a bit of a dove, so I'm not excluding, once we've got the rest out of the way, that when the market will turn its attention to the sterling, that we see people trying to go a little bit more dovish on the Bank of England. That's sort of what I'm expecting. By the way, we still are and we are now in the thick of it. End of month flows as well. On the global expectation, looking at equity markets, they should be a bit negative for the dollar as well, neutral or even negative for yen, because we saw the Nikkei spike over the course of the month. Sterling-wise, they should still be a bit supportive for sterling. But I don't know to what extent that's already in the market. I dare to imagine that people who need to hedge their month-end flows, looking at the importance of this week, looking at what's happening in the US Treasury, especially those needing to do dollars, I am not excluding that people may have gone a bit earlier to the market. We saw a bit of pressure on some dollar pairs at some point over fixing. So I'm not excluding that they went early to market. To me, it's going to be a difficult call this end of month. Yes, it should be dollar negative, but how much has been done and what is going to be the influence of the US Treasury in all of this, because they can really turn the market around. Bran, you're asking why the euro sterling is falling. I've already spoken about it in our room this morning. There's a lot going against the euro for a starter. I've named all those reasons already before. And there may be some end of month in there as well. We have seen end of month last month, December, although January is a much smaller one, that on the last day, euro sterling got a slap. Other euro crosses got a slap as well. I'm not excluding that some of it is still needing to be done in the similar way, kind of, during this month of January, but it may all be like getting very random. The end of month flows, I mean. The rest can give us clear signals, but the end of month flows could be a bit random, in my opinion. And then getting further into the week, we will also have the Banxico, I guess, on Thursday. They usually come out the day after the Fed. Are they not on Thursday here? Where is my Thursday? Oh, they are not. They are not put down on Thursday. Can somebody light my lamp? Are they actually coming out on the same day as the Fed on Wednesday? Okay. Anyway, oh no, I think Banxico is later. Let me just check. Oh yes, they're only slated for the 8th of February, so no Banxico this week. And I think that is about what I have to say right now, and we can move straight away to what's happening in the markets today. Euro is under pressure for all the reasons that I mentioned before. It's under pressure, and it looks like we are going to be retesting those. Well, we are already retesting the lows, and the prior low on Friday, and then on Tuesday of past week. Tuesday is already gone. Friday we're very close, and we are in this bit of a channel here. I reckon there is a good possibility that we are testing 108. The figure 107.90, and below there. There may be a bit of a gap opening there, but we do have, and I'm going to the daily for that. We do have the 100 DMA coming in at 107.75. We do have a bit of a fib action here around 107.65, and we do have the bottom of the cloud also in the 107.60. So that's going to be, I guess, a level that some in the market will keep a close eye on as well. If you get to those high to mid 107s, that euro could find a bit of support there. I've seen your Swiss questions, guys, and I will come to that. Okay. Yeah, Ali, euro stop 108.67. Yes, why not? 107.97. Yeah, it could be a good level. That's around where this thick black line is. It does look like the direction is still there. We're finding also lower highs and lower lows in a way as well. It does look like this pressure, at least at the start of the week, could extend just a little bit from where we are right now. Moving over to the sterling cable, is closing in on that. Is actually trading around that first support now again. But I think that there's more interesting levels here. The one is we've seen a lot of activity already before in the anything down from 126.70 down to 126.60s, 126 and a half. And still, I would still argue the major zone will be that 126, 126.10, where we stopped all the time. We tried really quickly below on the 17th, but then sterling bounced again. And looking at how euro sterling is behaving, it's going to be a dollar thing, but if it would only depend on sterling, I think for now, sterling could still find a bit more elasticity or more support than the euro, for instance. So cable is in the range. We are trading ranges, but it may find support a little more rapid than the euro dollar, for instance. Euro sterling. That's what we've been talking, and I've been talking about with Ryan as well. We saw all those gradual offers coming down, 86.20, then they moved down to 85.90s, then they moved down to 85.60s. We haven't even been retesting it. We did break the trend line here around 85 and a half. On Friday, we had a bit of a short covering ahead of the weekend. We did not reach, let alone get above the resistance at 85, 50, 55 again. I'd love to see a return here just to confirm that those offers are continuing to come down, because they do look to me like they continue just to gradually come down with the possibly unfilled offers in euro sterling. But we are coming into support. Yeah, we know that we are in support. 84.90 up to 85.05, prior low. We are now entering the support zone. Okay, I'm still running a bit short. I think we are going for the test. I'm now going to bring down my stop to just above the prior resistance. Well, where the offers came in, it's just giving me just a little bit of leeway versus the versus a possible little fakey and then coming back down. Going to bring my stop down here and see where we could end up. I will buy back more just around 85, 84.90, and then see what happens with the leftover. If it breaks 84.90 though, we could have a bit of a rapid move lower. Prior lows here in the high 83s, low 84s coincide roughly with extension levels. Yeah, we see the 1.27 is 84, around 84.15.20. That's where those prior lows are. And then the 1618 is just below where the July low was at 83 and a quarter. It's euro sterling. Don't expect this euro sterling to really collapse down to 83 straight away, right? But euro being heavy, sterling having finding a little bit more elasticity, it could be just be that we see a break of this and going for a bit lower levels. Remains to be seen. But then timing. If you get a break and we get down here, don't forget Bank of England is coming up on Thursday with the risk. The risk, I'm not saying it's going to happen, but with the risk that they've also seen those job vacancies and the inflation coming down and starting to change their tone. All right. That is something that we are going to be needing to take into account on the sterling. Yeah, you're talking about the Aussie. I was looking at that Aussie, but to me, we are still okay. We're capped where I said that we would find resistance. Okay, we're capped, right? 66. I said 10.25. Okay, this prior high perhaps, but we are failing, right? But this is very rangy for me. Very rangy. It could start to break down, but we are going to have to break below 65.75, 65.70 here. Look at that. It's always been a bit of support, 65, 65.70. So for me here, we are in a range. What is striking is perhaps a big word, but what I'm looking at is that Aussie dollar. People think that Aussie should be weaker on the back of China, but it does look to me that the Chinese situation is one that market is trading as China. We also have the Australian CPI coming out this week, which has been sticky, so the market could be trading on the back of it as well. Well, Ali, I'm replying to your trade because I'm looking at the data. But yeah, I think your 65, 62 is just below those prior lows. Okay, it's around the low here. Yeah, it could be reached, but therefore the dollar should continue to do well. And I think there's a lot of risk, as I explained already before, on the dollar. There's two-way risk with what the Treasury will announce. But I'm just saying that the Aussie CPI this week is probably going to have one of those two sides break. But in the meantime, I'm not really inclined to do much in the Aussie dollar for as long as we are in this relatively tight. So I mean that there's not too long to wait for breaks. If you look at 66, 15, 20, you look at the 65, 65, 70, that should open both ends if we get a break there. All right. We need to look at the Swiss franc, of course, because the Swiss franc looks to be one of the only currencies that is really responding to risk, and perhaps some of that Middle East risk is to be found back in the Euro Swiss. Some may find it surprising. A lot of people, I think, are already short the Swiss franc in some form or another. So we saw pressure on the euro this morning. The Euro Swiss is no exception, but the fact that we couldn't hold these 93.80s here on the Euro Swiss was a bit telling for me. And yes, the Swiss franc is one of the currencies that could again be bought for month end. I think that comparably, amounts should be smaller because last month we had year end with a lot of rebalancing going on. I think comparably the amount should be smaller, but the fact that there is a bit less liquidity in Swiss markets, the fact that the market is probably already running short Swiss franc after a bit of Jordan confirmation that they were okay with the levels of the Swiss franc, that the Swiss franc was strong enough. I guess we are gradually stopping out a few of the short-term traders. And look, we are in a bit of support. We're bouncing a little bit of this horizontal level right now. But into the end of the month, I'm not going to exclude some more Swiss strength, possibly. Dollar Swiss, yeah, we went back. It seems like we're developing some sort of a bit of a possible channel here as well, perhaps. There is horizontal support, 86, the figure around 86 figure 5. There is a horizontal support. We came very close. This is the 24th of January low, so keep that in mind. All right. And then below there is a level that a few of us are watching in the room, is at 85.50, 85.75 zone. That to me is possibly, depending on what the Treasury is going to, the US Treasury is going to announce us, but possibly somewhat of a target zone, possibly extended to 85.30. But this zone is going to be very important to what's happening at the end of this month. Yeah, at the end of this month. Yeah, correct. Wednesday and at the start of next. All right. This is really, to me, a pretty important level, because if you can see, yes, we have some range trading here at the start of the year, but then we started to move higher. So if we come back into this level and start to break below here, that's probably bad news, and perhaps telling us something about the dollar as well at that time. All right. I'd be very supportive for dollar Swiss if you start to break back above 86, 80, 85 for a move back into the 87s. But as I said, to me, the magic level for the more medium term and the longer term, my magic level is still those low 88s. And I know that people are going to say, oh, we're breaking a trend line here. But it's a downsloping trend line, okay? So you still have to look, in my opinion, at levels. And you see here this level of activity. It is starting at 87.65 all the way up to 88.1020. This is still my personal magic level. If we get above 88.1520, then we are off to the races, in my opinion, more medium term, okay? This is how I look at the Swiss. We need to look at the oils, right? We need to look at the oils. Oh no, before we look at the oils, let me look at those differentials. We saw on the comments of those of the ECB members, and then I think also what happened, Joe Biden on and the LNG project, and that finally the market waking up to the supply chain problems that EU may have. In the Red Sea, we saw the differentials again widen pretty dramatically, and also versus the sterling. And that is the other explanation for your euro sterling, because we are, even though it's difficult to chart differentials, but just look at the move, and it's going to explain you why euro sterling is under pressure again. That is sterling over euro, okay? So, and those differentials have been widening again. So that also explains why your euro sterling is under pressure. And as we speak, that pressure is continuing because the cable is finding a bit of support under 127 again. So let's have a look at oils. Resistance, we are there. 79s, 79s. We had a look into the 79s today. You're seeing the 100-day moving average comes in at 79.40. So this is resistance, all right? So this is where we are. So far, every serious move higher in oil has been met with resistance, and pretty fierce resistance. I was saying, though, that the longer this Middle East conflict or troubles persist, and they're still not seeing the end of it, of what we can gather, the more there is a risk that the market is going to say, like, well, and that's a very sad but true comment. The longer a war lasts, the more, and a war eats energy, right? So this is something that we need to. I wouldn't exclude. Yeah, I see what you say, Brian, about Saudis, about trying to keep proactive, but they have been trying to be proactive from the start, and for the time being, it hasn't really been very productive, right? So keep an eye on what's happening in the low 79s, mid 79s on oil. If we get through, there may be some people, because the species try to sell all those rallies, there may be some people looking for a higher bounce, okay? If we start to get back below 77.5, then we probably will, the pressure valve will be released a little bit, and we can see it back down. But for the time being, for not going to really fight this move. Yeah. All right. So that for WTI. There's also upward pressure on the Brent, of course, and there we are turning around this 100 DMA already. So this plus what's happening in the 84s is going to be important. Okay, look at this, higher here, low here, and we are getting into those levels. Yes, we are coming back from those levels, but pay attention to where the close is and how the week develops. I'd say that for as long as we are above 81.5, that's a while away, but the oil market has seen those kind of moves. I am not going to fight this, okay? This is just me personally. I am not going to fight this. And yeah, people were talking and asking about the cap quite a lot. Bit of horizontal support around the 134, 134, 134.15. That's your level on the dollar Canada. Of course, it finally did respond, I think, to what oils are doing, because the Bank of Canada was relatively neutral, wasn't it? So keep an eye on what's happening at 134. Top side still very clear, 135.40, and in between, pick a side. Pick a side for the short term. I'm not, but there's one that is showing signs of weakness here, and that's EuroCAD, and the EuroCAD is looking a bit fragile. We are going to get into support here, low 145s, but we couldn't hold, and we've been turning around. We've been speaking about this 146.40 on the shorter term. You will see that level pop up even better. But now, if you're looking even at the daily, we failed around the 55, and then we are now trying to get to the low of this channel, where we have decent retracement action as well. Seen some levels popping up here as well. I pay attention to this low 145 in the EuroCAD. Okay, if we see more upward pressure on oil, if we see the euro keeping a more negative bias to start the week, this could come under pressure and perhaps even have a visit lower. So be careful, okay? But until it breaks, it's holding, right? That's how we treat a market. Any other stuff that you would like to look at before I call it a day? Just browsing through a bit of stuff. Euromex, we saw those spikes higher, but we are not holding above 1880s. Gold, yeah, okay. Gold, right. It's trying to get out of this triangle, but you know how it is when a triangle comes to the pointy end of it. A break can look like a break, but I'd argue that we need to get above 20, 38, 39, and then even above through those 2040s to really get going again. Gold would be some kind of a safe haven, Ali, but for the time being, we have only seen shallow rips higher. I'd argue we are still pretty much in a range on gold. We have tried the lows which are holding. That is encouraging for the people who want to buy dips, but we are going to need to break through those levels here. It's actually a bit, not going to call it strange, but we've seen a bit of a move higher into Asia, seen a bit of a spike here at the end of Chinese time, but then we are stabilizing again. We are going to need to see follow through to really get going. I'm for sure not going to sell it. That's a fact on what's happening on geopolitics right now. But the dollar could decide that it's not holding as well, right? So we have to pay a bit of attention. There's one that, to me, I know some people were looking for breaks down here, but that is holding relatively well. It's an industrial metal, right? This silver. Gold-silver ratio is also turning a bit. And with the overall situation in the US holding up well, and perhaps China trying to do something about their would it be local economy, this is one that actually could hold better now, and it's not a very clear hedge against geopolitical trouble or wars, but it does show sign to me that we are holding relatively okay. And if we are starting to hold this 22s, low 22s again, this could push on. But then I'm also talking my book on this one because I'm still long-term long, but I would have loved to buy it here, and I have to say that I'm starting to wonder if I really will have the opportunity to buy more here. But that's it for the start of the week. Yeah, the dollar is a safe haven, Ali. True, unless the US over time is getting more and more involved. And there is something that a safe haven is always valid until you really get involved too deeply, and then it might fire back on a currency, okay? But that's very, very extremely difficult to time. Extremely difficult to time. All right, guys, that's it for me for today. I hope you have a very good week coming. Be careful. There's a lot happening this week, okay, on various in various areas. Central banks, a lot of important data, because I did even forget to mention the jobs data out of the US over the course of the week. And there's a lot happening in Euroland as well. And we have the Bank of England and everything else. So be careful, manage your risk, manage your discipline, your outstandings. No horror stories, okay? Have a great week, everybody. Thanks for coming to the Flow Show. We talk to each other tomorrow again.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.